Nothing in this recording is intended as investment advice, and the people in this recording may hold positions in the companies they talk about. Do not make any investment based solely on a tip or recommendation. Please do your own research.
Hello and welcome to Zacks Traders Cafe. Today I'm joined by Russell Fryer, who's CEO at Critical Metals. How are you today, Russell?
I'm excellent, Zach. Thank you for having me today.
Right, we haven't spoken for quite a while, which is I suppose, a loss to both of us and probably the listeners too. Since I think we haven't spoken since the autumn, maybe you could run us through what's been happening at Critical since then.
Sure. So in the autumn, we were preparing to deliver ore, and we had a road issue that we needed to sort out. It took about 4 months or so to sort out the corridor from the mine to actually the market. And we finally sorted it out, and we delivered 3 trucks of ore to our offtake buyer, who's about 50, 60 kilometers away. And the road that we use actually degraded, and it degraded because we saw a 4 times increase of traffic once we had improved the road in June, July. It was open season on using the road by the local villages and such. So the transportation company took a step back and said, hey, fix this road up so we can use it 12 months a year. And we are preparing to do that now, actually, next week. So it took a while to get the studies, figure out where the water collected, to get the compactors and the graders and such. In the meanwhile, we've begun some mapping because we need to complete our 2,000 meter diamond drill program. So we've got 1,000 done, so we're halfway there. We're going to restart drilling here in this, shortly, and I'll make that announcement via an RNS. We've got the geologists on the ground doing some mapping and some trenching, and actually finding some new areas that we didn't know was mineralized. So it's quite exciting there. We are busy doing an analysis in terms of getting a concentrator to upgrade our 1 to 2% ore, closer to 4 or 5% ore, which we think is the optimum grade to sell into the market. And then I think this is a coup. We've had Gordon Thompson, who's ex-Goldfields, ex-Boss Mining, a very seasoned veteran in the DRC, join the board as the technical head of the technical committee and such. And Gordon and I will be going to Malulu and going to Kolwezi in about 2 weeks or so. So a lot of on-the-ground action that hasn't been RNS'd or announced. We still believe that with this extra 1,000 meters of drilling, we'll be able to create a block model and a mine plan and have the pathway to production in 2024.
So getting to the nitty-gritty, you sorted out the issues that you had since the autumn. I think in October, your share price was 18p, something like that. And it looks as though you're in a better position than you were then. You've also got the latest funding news. But the shares are just around 4.5p, and you've got a market cap of 3 million. Do you think there's a disconnect between where the company is and what the market's saying in terms of the valuation?
Sure. So what we're seeing, this is actually below the IPO price when we were just a shell. And we've put about 3 million pounds of capital, 2.5 million pounds of capital into the ground. We've built a camp. We've been in production. We were in production the 3rd week of January 2023. So we've de-risked the project. What we need to do is better understand the mineralization and how the 3-kilometer strike performs when mining. And so, we've just raised on a convertible loan note, and it's not a death spiral note because we control the conversion, not the holder of the note. We've just raised 1.6 million, which is roughly 50% of our market cap. And we've put roughly 2.5 to 3 million pounds in the ground. And we have shown production. We have inventory of a couple thousand tons on the ore pad. We have an offtake buyer. In fact, we have 7 interested parties that want our ore, but we have one particular offtake purchaser in OM Metals. So we've de-risked this company. So over the next couple months, we'll finish up with some geophysics. We'll finish up with our mapping. We'll finish up with our drilling, and we'll go out and have a plan to recommence production. And the market's not given us that type of credit. And so they're very much in show me mode, which we have our tasks to do. And we believe that we will actually perform and show the market that we are undervalued at 4.5, 5p where we're at, which was really the IPO price.
And so is it the case, I mean, so how far does the latest funding take you? Maybe that's the question to focus on.
Well, but it depends on how aggressive we want to be in terms of equipment expansion. Now, one of the reasons why we're talking to the U.S. government and we've received a term sheet is we wish to be aggressive. We wish to get a processing plant. We wish to get the concentrator. We wish to get Caterpillar equipment on the mine instead of having to lease it. So the current 1.6 million can get us going till the end of the year and keep us going till the end of the year. We will have some type of sales here in the near term, and when I say near term, over the next few months, because we do have inventory on the ROM pad, and the off-taker actually wants that as soon as the road is completed. The road should be complete within 60 to 90 days, and then we will sell them the remaining ore on the pad, which will bring in a little bit of income. But the 1.6 million should get us to towards the end of the year. And by the end of the year, again, as I mentioned previously, we should have commenced production.
So really, the market is still behind the curve in terms of what you have been doing and what you will be doing for the rest of the year.
Correct. And what's interesting is our share price used to mimic and follow the copper price until about 6 to 9 months ago or so, when we had the issue with the road and the deliveries. And then there's been a disconnect, and I fully expect it to revert to the mean, because we're a copper company with cobalt co-credits and cobalt deposit, and I think when we show the market that we can go back into production, we have a plan that's announced at 9,200, 9,300. I think there should be an incredible re-rate. We do our numbers at 7,500. I just started doing some numbers at 8,500. And at current prices, our margins that we're going to sell our ore to OM Metals increased by about 20 to 25%. So it's actually a great time to be a copper producer in 2024.
And I mean, that's underpinned by the outlook for copper itself.
Yes, absolutely. In fact, Bank of America came out today or yesterday and said they see a 30% increase in the copper price from yesterday's price. So if yesterday was about 9,000 or so, call it 9,300, add 30% of that, they say that number is their target over the next 12 months. So we want to deliver direct shipping ore, copper ore, into the market under those type of circumstances.
Well, we look forward to that. In the meantime, Russell Pryor, CEO at Critical Metals, thank you very much indeed.
Thank you for having me, Zach.